Hello, everybody. Welcome to the Handa Show. Today, we're going to talk about the US presidential elections and its implications on your investments and our investment strategies going forward. When it comes to future returns, nobody has a crystal ball, and trying to guess an animal or trying to predict an animal as complex as US economy is a wasted endeavor. I don't think any person, including the President of the United States, has enough influence to wreck the US economy or improve it significantly, because there are too many global and domestic factors that influence the economy, and I don't think any person can influence it, especially not in 4 years. So who are the people who are interested in something new happening every 2-3 months and trying to predict how that will influence our investments? It's 24/7 news channels, the anchors. They have to talk about something. That's your job. And then you have day traders. They are trying to look at these small things and trying to predict the outcome so they can get a little advantage over you and me. So that way they can maybe juice a few extra points, a few extra basis points of return over you and me. And that's not a good strategy to do investment, not if you are looking for next 25, 30 years. I personally think the reason the West has done so well in last 500 years and America has done so well in last 140 some years is because of market economy, its judiciary, its rule of law, and right to private property. And no president can take these away from you or give them to you. So the secret sauce persists, and the secret sauce is America. For my own investments, I don't like to look at the politics or the president or trying to second guess their policies because I don't think that has enough impact on me or my investments. I just like to keep buying real estate, keep buying stocks, and hold on to them. I'm going to hold on to them for decades. I don't think about next 3 months or 4 months or 6 months. I'm a young guy. I'm looking for next 30 years or 40 years. The key is to buy the investments, buy the right investments, and hold on to them. Jumping in and out of investments, that's what gets you into trouble. So try to avoid investments that you would have to sell later on. But if you make a mistake, yes, I by no means tell you that hold on to that mistake. Sell that investment, cut your losses, run away from it, but try to buy things that you don't have to sell. Basically, your investment performance does not depend upon any election. It depends upon how much money you are investing and how long you keep the money in the markets. So I'm going to say the cliched words here. Do not time the markets, but spend time in the markets. That's what will make you money. As investors, you should always try to keep your political biases on the side and look at all things dispassionately, because politics is different, making money is different. Right now, with the interest rates where they are, what can you do? You have to buy property, you have to buy stocks. And it's not a question of where the interest rates are today. If you have to make money, you have to buy assets. That's the only way. This is the classical Tina effect. I mean, everything's said and done. The markets can be choppy for a little bit in the near term because of all the uncertainty market perceives because of the elections and the sickness going on. But that should not scare you. You should persist with your investment strategies, keep adding to your investments without stopping. There are a lot of urban legends out there regarding the presidential elections and how you should time the market. The impact of any president can be on certain sectors like healthcare, oil and gas, defense contractors, not on the whole economy. And I always tell people to buy index funds. And when you buy an index fund, you're betting on the whole American economy. You're not picking and choosing sectors and trying to get in and out of them. You are betting on America. In the last 243 years that America has existed, American economy has been an economic miracle. And it will continue to be so under any president. If you look at this graph here, you will see American economy has done well under all kinds of president, and pulling your money out under any one of them would have been bad for your financial health. Markets like certainty, and what do the election bring? They bring a little uncertainty in people's minds. So during election years, historically, if you look at the graphs, the markets tend to underperform, but then they make up for it after a year or two. So what does it boil down to? What it comes down to is the presidents don't decide the fate of the economy, but the economy can and will decide the fate of the president. Usually for the economy to have a severe bear market or have significant volatility is because of some severe economic crises, like you had the housing crisis in 2008, 2009. Now you have the illness. The presidents, they are an afterthought. So the biggest threat to the US economy or the world economy is not the presidential election. It is the sickness. A lot of people are treating the sickness as a binary event, that a vaccine will come around and everything will be back to back to normal, everything will be hunky-dory. I think the effects of this illness on the economy are going to persist for a long, long time. It's hard to make your investment decisions following cable television. So if you get spooked and remove your money from investments and put them in CDs, you will lose a lot of money in your lifetime. Trust me, it happened to me and my family. My dad, he was a very conservative guy. So he used to keep a lot of money in CDs, and we tended to underperform the markets significantly. So no president will hurt you as much as you getting spooked and not buying investments. So I think you should keep buying stocks right now. If you find a good real estate close to your house, I don't recommend buying something very far away from your house. Buy it. So why am I a bull right now? Because I think this is the start of another secular bull run. Corporate profits are low, they can only get better. Unemployment is really high, it can only get better. The Fed is committed to keep interest rates low, and in my opinion, the interest rates are going to be low for a very, very long time. The quantitative easing, it will continue to happen. So the Fed is committed to helping the economy and it will not back off. So if you're a young investor and you have time on your side, don't get spooked by the volatility. Persist with buying stocks in your retirement accounts, 401k, HSA, Roth IRA, in that order. If you get a nice piece of real estate, you can make money in your backyard. When I say your backyard, I mean within half an hour of your house or where you live or your job, buy it. I think today's video should have allayed some of the fears that you have, and it will help you keep calm and keep making those investments consistently. Watch out for my next video, because my next video is about a young man and his wife who have good jobs and they do real estate investing on the side. They make upwards of $500,000. I don't make that kind of money. I only probably will make about 400K this year. So watch me there, look at the reaction video, look if you have any lessons to learn and implement them in your own life. Alright guys, that'll be it for today's video. See you in the next video. Happy investing.